Welcome back to the Crypto Rainn channel. I'm your host, Jay Murph. Today I want to share with you one of the solutions that I'm most excited about. Now, I don't know exactly what will happen with the market, but my guess is we have plenty of bull run left. I know some people disagree with that, but watch and I think you'll see. Now, one of the challenges with the bull run is you never know where the top is, and it's great if you can explore further upside while hedging a position. And there's a company and a project that's bringing that to us, and I'm very excited about it. I've been following about this since I first heard about it, and today I have on again the CEO, Jonathan Decarteret, to share with you exactly what they're doing and why it's so special. So let me see if I can join him in here. Jonathan, are you here?
Hey, Crypto Rainn. Good to connect again.
Yeah, thank you for joining us. I'm excited to have you on. You're one of my favorite projects in the crypto space. I particularly like projects where their use case is extremely valuable, and I didn't even think that a project like yours would come together, and when it did and I was reading about it, I was really excited because you're solving a big problem that investors like me and people who like to invest in the crypto space often think about, of how. Anyway, I'll let you share it because I would like my audience to hear from you. Now, you did come and join us 2 months ago, and so some of my audience knows your project very well. I know many of them were as excited as I was, but some of the people here are hearing about it for the first time. So would you mind sharing with us exactly what Bumper is?
Yeah, sure. It's quite simple, really. Bumper has just one pure objective, and that is to protect the price of your crypto assets. And to be specific about that, what we mean is that you can have like Ethereum, which you feel might kind of reduce in price. You can send that to the Bumper protocol. You can set the price that you want to protect, and we will 100% stand by redeeming you that value if Ethereum drops below that price. But the beauty is that if it pops above that and Ethereum goes up, well, then you get that gain too.
Well, yeah, perfect. So that sounds pretty simple and elegant. There's probably a lot of complex ways that you had to figure out in order to accomplish that. Can you tell, I guess, us more how that protects, I guess, how that works?
Yeah, it gets complicated really quickly. And the best way to kind of put some mental architecture around this to understand how Bumper operates is to start with a really simple childlike analogy. So let's imagine that you own a Bitcoin, you saw it race up to the all-time high of 63,000 USD, and your investment thesis was, okay, I think Bitcoin's a bit toppy, I think the market's going to retrace down. So let's say you protect your Bitcoin at $60,000. Now, let's say you're right, the market, as it did, retrace down. As it kind of passed through that $60,000 floor, you're swapped into stablecoin. Now, that's great. It means if the price of Bitcoin continues to drop, you've cashed out. It means you can profit from that position that you're in. But if the opposite also applied, so that if Bitcoin pumped and it pushed up above that $60,000 floor, then you'd be swapped from stablecoin back into Bitcoin again. So you would benefit from that surge upwards. So what that really simple analogy does is it gives you all the downside protection, but it gives you all the exposure to the upswing. And the only problem with that simple analogy is it just simply doesn't work, right? And we modeled this 12 months ago using hourly, minute, and tick data. And the problem is that every time you're swapping between stablecoin and the unstable asset, you are hit with slippage costs, with transaction fees, and DEX costs. And where the asset is oscillating along its floor and you're trading in and out maybe hundreds of times a minute, it means that you start to eradicate the principle that you're trying to protect. So what we really did at Bumper, I think, was the kind of the key insight for us was to realize that we're not trying to solve for volatility, we're trying to solve for slippage. And if we could solve that problem, then we've got the volatility problem in the back.
I can't believe how simply you described that. That's amazing. That's pretty elegant, your description of it. With that said, is there anything else in the market that solves this kind of problem so elegantly?
Well, it's interesting to us, right? When you look at the market for instruments that help you to protect against volatility, then volatility is a thing that's been around since markets began, right? But the tools that we have available to us to deal with volatility are just really binary, right? You've got stop loss, which is like a circuit breaker, so that if the market crashes, it cashes you out at a certain point, and that's it. You miss out on any subsequent upswing. The other more sophisticated tool is an options desk, which is used quite heavily by traditional finance. But when you look into them, they are clunky, they're expensive, they have these fixed expiry windows. And, in our view, an options desk, which was introduced in 1973, that's a 50-year-old technology. And we think it's time for something new and innovative to come about. And I think this is the point with Bumper that I really try to kind of underline with people, is that when you're dealing in the crypto sphere and you're dealing in a decentralized finance ecosystem where you have low latency and high frequency, we can start to do things that you just can't do in traditional finance. And what Bumper does is essentially take that risk, right? Because risk is a thing, you can't get rid of it. It smashes it with a sledgehammer into a billion pieces. It then distributes that amongst pooled liquidity and then surrounds that with kind of cascading redundancy mechanisms to protect it from, black swan market crashes. But what you have at the end of that is this new approach to risk management that is really efficient, it's really robust, and it's really fluid. So you can dip in and out of protecting yourself or unprotecting yourself as easily, as quickly as you want.
That's amazing. Do you mind if I share with everyone kind of my take on this? Like, my audience knows that I'm a crypto investor myself, and one of the downsides of a bull market, I believe in the simple principle of buy low and sell high. The problem with selling high is you don't know where the top is. But at a certain point, you're like, I'm worried we're at the top, but sometimes you're wrong, and you're wrong by a long ways. And the downside is you can't, normally you just have to start taking profits and taking them a lot of them. And say you think, well, Bitcoin might go above 100,000 and it might go to 300,000, but you don't know where in there it's going to go. So when it hits 100,000, the normal problem that you're dealing with is, man, I need to sell half my position. Well, with a project like Bumper, you can actually just insure it, and you can say, okay, I don't know how high to go, let me insure 100% of my position, not 100% of where it's at now, because with Bumper you can insure 95% over 90, but you can say, why don't I explore further upside while just hedging, and why don't you put in a hedge that locks you in at 95,000 or 90,000. Well, oh my gosh, it went to 150,000, so then you can pull out the insurance there, reinsure it at the $150,000 price, so then it insures, say, 90 or 95% of it, and then you don't know if it's going to keep going up, but then it does. It goes up to 200,000. So normally your take profit strategy would lead you to, say, take half at 100,000 and sell another 50% of what you have remaining at 50% at 100,000, another 50% at 150,000, and then the rest of it at 200,000. Well, what if Bitcoin goes to 300,000? You missed out on huge amounts of gains because you had to hedge your risk. Well, what if there was another way like Bumper where you can hedge your risk while exploring further upside at a minimal cost for what it can give you? And so that's one of the reasons when I read this, I thought, that can't be the case what it's doing. But I think it is. I have to talk to this project. And so I appreciate you not only coming on for my audience, but coming on for me, because this has my full attention.
Well, do you know what? You're absolutely right. And that's one of the key use cases of something like Bumper, right? And we've really thought about that. And the beauty of Bumper is, you've got to pay a premium. You've got to pay a charge to be protected, right? So we're kind of estimating that it's going to be nominally about 3% per annum. But that's a floating charge, right? So that means each day it will depend on the price of the asset that you're protecting. So that means if the price of the asset you're protecting is dropping, then your premium you're going to have to pay goes up, right? But the opposite also applies. So to take your example, if you protect, say, your asset, I don't know, let's say it's 100,000, and it shoots up in price and it moves away from the floor that you're protecting, well, then the premium that you have to pay drops down to almost negligible levels. So it's like a double win in some regards. So the more your asset kind of moves away from the floor, your insurance cost drops to almost zero.
This is the kind of gift we were looking for that we didn't ever know we wanted or would ever be possible, right? And when I was reading your white paper, I was like, oh my gosh, this is amazing. So I think a lot of my audience, when you came on before, really got it, because I know a lot of us participated in your liquidity pool so that we could earn some of your tokens and get some actually good returns. Now, I think that's still going on, but last we spoke was about 2 months ago. Would you give those that have never heard of what they can do now to, I guess, provide some liquidity and participate, what they can do that would give them a return, as well as be able to participate and possibly get some tokens if they're interested?
Yeah, sure. Well, let me start with just kind of snapshotting some of the developments with Bumper. So imagine we came out of a laboratory where we were there for 9 months designing this thing. We smashed out the curves, the algorithms, the equations that really power Bumper, and we were able to prove that they work using something called agent-based modeling. So once we came out of that process and we, kind of wrote up the evidence, we were very quickly inundated by VC investment, and we took it in, I think it was $11.3 million. Is that Bumper's long-term success is going to be down to everyday users using the protocol, taking insurance or making protection by depositing USDC. What we did immediately then is we got into back into the lab to build out the one half of the protocol, and I think this. Lots of protocols can have a really good idea and have a good white paper. Whether they can then execute on the technology and deploy that and prove that this thing works is a whole other matter. Now, we've written half of the protocol, smart contracts, which we published on the 14th of July, that then allowed our long-term supporters to deposit USDC into the protocol. And they have to lock that up until the 14th of October, so it's like a 3-month lockup. And by doing that, we reward them with a distribution of BUMP tokens, which is our native token. And that's looking at about over 350% APR. So it's an attractive incentive for people to deposit USDC into the protocol. We also added on another strata on top of that, which is if you do want to deposit USDC, you have the option at that point to also buy the token at private sale. So that's why we limited the amount of tokens we sold to institutions, because we want the long-term users of the protocol to be the owners of this. This is a protocol that's going to migrate to a DAO. And so when you deposit USDC, you're also able to convert up to 20% of your USDC to buy BUMP at the private sale price, which I think as of today is about 69 cents. So that's almost kind of basically, kind of allowing almost that institutional price access, but for retail users. So I suppose what that kind of has done, and that was really well received, that liquidity provision program. I think we closed $8 million in the first 4 hours. I think it's sitting just under 12 million now, so it's way above our expectations of where we wanted to hit. And that gives us a fully diluted valuation of $172 million, and that conservatively will hit at least $250 million by the time we hit IDO. So we are very confident now that Bumper is on this trajectory to becoming a major DeFi protocol. And there are so many applications of Bumper, like the one that you mentioned, but that goes all the way through to, kind of institutions. And, I'd love to kind of extrapolate a little bit more out of that kind of go-to-market strategy. But it's a protocol, I think, which now has momentum. It now has the support base and the deployed tech that proves that this thing can work.
Yeah, I did have a question on the backside, because you can just provide USDC to earn a return that essentially goes up as insurance. And one of the things on my mind as an investor is generally in crypto, there's this 4-year cycle, and we're in usually the parabolic part of that. But at some point after it goes parabolic, it retraces a lot. And so I'm, not exactly, I'm looking for holding some assets in, say, even stable coins or other things. So if I took a whole bunch and I put it on the USDC side, what kind of returns do you expect that it would be paying?
When the protocol goes live,
Yeah.
yeah, that's a difficult question to answer because of that point I mentioned before, which of the floating daily premium charge that we have.
Yeah.
So just to kind of give your viewers a little bit of an understanding then. So imagine that Bumper is comprised of two pools that need to be balanced. So one pool is the unstable asset pool. So to launch, that will be an Ethereum pool. And so people want to protect their price of their Ethereum. And on the other side of that is USDC, the stable asset pool. So people who put money into the USDC side will receive a combination of the premiums that the Ethereum protection takers, the premium goes mainly to the USDC providers. But because that money's sitting in a pool, we can be quite clever with it. We can send it out to farm aggregators like Yearn that generate a yield off that, and then we send that yield back to the USDC providers too. So they're getting two revenue streams or two yield streams. One is the protection premium, one is aggregated yield from other DeFi protocols. So what we feel that should almost certainly guarantee is that beats nearly any other protocol. Find whatever else there, we'll be able to provide that plus the premium top. What we're looking at in terms of yield, like I say, it's going to be difficult for me to estimate that, but I think somewhere between 10 and 20% would be a good kind of ballpark.
That's so incredible. That's so incredible. People in the normal world that are trying to stay in the normal world and not look at this world, they're buying these bonds at like 1% or something. Being in the crypto space, we have access, even when we're in something like a stable coin like USDC. Looking at something like a 10% return is unbelievable. If you went to your billionaire friend and said, "Hey, you can get 10% returns on your dollar through this stable environment," they wouldn't even believe it was possible.
So. Well, exactly, and I think that's been the game changer. I think in crypto is that if you just go back 2 years before DeFi was around, then coins were really just you kind of cashing out of the game. You're cashing out of the casino, and you're kind of sitting on the sidelines. Whereas now with DeFi, you can take your stable amazing yields compared to traditional finance. So it's this is the beginning of an evolving market, isn't it? That we're seeing. This is something new and special and long term that is going to as my personal thesis is going to eat traditional finance from the inside out.
Completely. There was a video on that by Rainn Paul that was so amazing, and he talked about where this is going, and he summarized it in about an hour and a half. It's a longer video, but I mean, people pay Rainn Paul millions of dollars to give them financial advice, and he nailed it in as quick a time as possible about how this is going to change the whole planet, the whole world, and finance particularly.
Yeah, I totally agree with that, and I think when you consider the notion that we now have money which is smart, that it's programmable, that it's frictionless, it's non-custodial, it's just superior in every single way because the fundamental is superior. Then what that does is it gives rise to things like Bumper, things you could just never do before.
Yeah.
Right? And that's what we're starting to see now. It's like the new epoch of a financial revolution.
Yeah, when I was reading it, and I had a friend that was really big into DeFi, I had him read it too to make sure I was reading it right. And I was like, what they're doing here is so amazing, and there's so many applications of it. I hadn't even yet wrapped my mind around on the backside with stablecoins what you just mentioned. And when you explained that in the first time that we spoke, I was like, oh my gosh, this is gigantic. So I appreciate you coming back on the channel. I only like to talk about projects on the channel that I would personally buy, and in many cases that I do buy. And so that's why I want to have you back on, because one of the ones that isn't yet launched that you can participate in that I'm most excited about in this whole space. Well, let's...
Cool, man. Cool.
So once Bumper is live, which is going to be November... do you have an idea?
That's what we're shooting for.
Okay. Yeah. So likely November,
yeah.
Or it could be December. But when you go live, what happens then?
Okay. So what we have then is a protocol that is fully operational. Okay. So if you're a protection taker, you could send your ETH to the protocol, There's a really elegant app that allows you to set the price that you want to protect, right, and how much of your ETH you want to protect, and it tells you, this is the likely premium you'll have to pay, and then you send your ETH to the protocol. And this is where I think we're really pushing the envelope. What you then receive in return is BETH, so bumpered ETH. Now your bumpered ETH will never fall below the price that you protected. That the protocol will stand by. But it will follow the price of ETH all the way up. And the beauty of this is that BETH is a fungible token. You can go off and you can trade that. It's not locked up in the protocol. You can go off and trade that. You can open up a collateralized debt position knowing I'm never going to get liquidated because my BETH will never fall down below the price that I've protected. You can use that. You can trade that with other people. You can stake it in other protocols. So I think when we start to understand the applications of something like Bumper, it becomes quite exponential. So it starts off with people like you and I, retail users who want to protect our assets, and we send it to the protocol. Then there's the lending CDP market I mentioned. Then you also have those kind of really large crypto trading firms that had this fiduciary hedge to take, a fiduciary duty to take a hedging position. Mm-hmm. And at the moment they're using, optional desks and stop loss, which are really inefficient. So this will just smash down that kind of barrier and give them a much more efficient instrument to use. And then the big game play here is that our default that is protected by Bumper at a certain floor. And that can then kind of interplay into other DeFi protocols. And I think we're going to kind of getting into that kind of really exotic world where, the beauty of DeFi is composable. And by plugging into Bumper, any DeFi protocol becomes inherently hedged by using the protocol. And then, where do you go from there? You could take tokenized traditional equities like Tesla, and you could Bumper that to kind of take the traditional world and merge that with some of these new exotic innovative instruments that DeFi is creating. And then of course it kind of will go into what we think and what we're planning for is a regulated version of Bumper to allow those really big institutions like Tesla who are buying crypto and holding it on their books and giving them a regulated way to protect the price of their crypto assets. And then beyond that, this is such an expanding space, but I think what is intrinsic to it is volatility is an intrinsic problem, and Bumper at a fundamental level is able to solve that for all these different vertical markets.
Yeah. In the big funds, like the hedge funds and this kind of stuff, and risk mitigation is what they're all about. In fact, they get fired, they lose their job, and sometimes worse than that if they don't. And so my guess is when they wrap their minds completely around this, it will blow their minds. Because the language you're speaking sometimes goes over our heads when we're new. I had to read it a couple times to really grasp it. And then I rewatched the video from our thing just to kind of really try to understand this at a deeper level. They speak in those terms all the time. So when you explain this to them, I imagine it's received really well, which is why they probably said, how much money can we invest with you? And you had to leave some portion in order for everyone else to be able to get involved.
Well, we certainly did. We took on 11.3 million. We declined 32. And I think that is testament to the confidence we have in the protocol long term. We didn't want a huge amount of VC money. This is a protocol for DeFi users. And, we want people to own that bump token, to have that governance control, to have that DAO influence over the future of the protocol, and to kind of really secure that long-term, not just a few big institutions trying to control it.
So for those that are watching, if you want to buy Bumper, you can't get it on the market yet, but as Jonathan described, there is a way. Can you walk them through what they can do to get some Bump tokens if they're looking to get some?
Yeah, sure. Well, there's a couple of really good resources. So if you go to bumper.fi, or bumper.finance, and you'll see there's some resources like our Medium page where we've worked really hard to kind of create a lot of documents that kind of really step you through how to use the protocol. But the easiest way is you go to MetaMask wallet, you deposit USDC, you choose whether you want to buy bump, and just allow yourself to have that money locked up until mid-October and receive your complimentary bump tokens.
I think my internet connection lagged through part of what it. So you were saying it cut out the whole part with the MetaMask wallet.
Okay, cool. So I'll start that bit again. But the easiest way is you go to the Blockfi website, you launch the app and connect your MetaMask wallet, and then you just choose how much USDC you want to use to buy bump at the private sale price, and you will then start receiving and earning complementary bump tokens and be able to withdraw your USDC in mid-October.
That's amazing. Now, there's an option to extend, right? Because in October, you can pull it out that soon, but if you leave it there, it continues to earn for you?
Yeah, that's right. Yeah. We're going to release details of that nearer the time.
Okay.
But we're obviously keen to essentially introduce a kind of yield farming version 2.0 at that point,
okay.
Which will allow people to kind of continue receiving.
Perfect. Because yeah, I'm excited. I log in once in a while and I check how many bump tokens I've already gotten from what I deposited, and then I try to add more. So now, yeah, I'm liking that number going up. Okay, so there is an option in November if we want to just keep it there and keep it earning for us, we can, and you'll go over that in coming time. In case it kind of jumped when you were talking, the website to go to is bumper.fi, and I'll put a link below the video with that, and I'll get your Medium page and I'll put it in there so that if you just click on see more under the video, you can go right to the link and follow what it says there. Also, I'll put the Telegram channel. I believe your moderators are really good on that if they do have technical questions and they're going through it.
Yeah, that's brilliant. Thanks, man. Appreciate your support.
Yeah, this is good for all of us, right? As you know, I was here in 2017. I rode the market all the way to the top and then all the way down. I wasn't new to investing, but I was new to crypto, and I believe people when they said, "Oh, this time it's not going to go down." What goes up always comes down at some point. And so I did have a take profit strategy, which is take profits on the way up. This just gives me a better option so that, because often when I do that, and I've done that lots of times through the bear market and stuff and kind of practice that take profit strategy, sometimes you leave so much money on the table you wouldn't believe it, but you kind of have to. And so this product allows you to do it in a different way, so you leave way less money on the table. And what they're charging in the fees is completely negligible compared to the gains that you're often leaving on the table when you take profits on the way up. So very excited to see it come to fruition. Many of my friends and my audience are too. That's all the questions I have. I do appreciate you
great. And,
joining us. Any big news coming up or that you can share with us, or any big steps in the next week or two that we can look out for?
I think we've got a few announcements coming up, but we'll probably need to keep them.
Sure.
Under our hat for now, but I would get ready.
Yeah, sounds great. I'm going to take them over to this wrap I had done for the Crypto Rainn channel.
Came into the space chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, you buy before you're good. Was taught to buy when it was pouring like a rainmaker should. I buy when it's down, don't chase the boats that I miss. Cause I'll always make the time in mind. I sit the one out cause I'm patient like that, and I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't lead with my heart. The principles are simple, they're leaving a mark. Why when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling, go parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck.